Hi, my name is Sanjiv Bhatia, and I'm coming to you with the second monthly update for the Hedge Invest Benbridge EM Absolute Return Fund. September was quite a challenging month for global, and it marked the first negative quarter for global equities since the pandemic started in March 2020. In particular, EM had its second worst quarter since 2016. The macro factors that have been providing a tailwind to markets since the COVID pandemic hit have started to turn. At Pembroke, we look at a three-factor macro model, which focuses on interest rates, the US dollar, and oil. All of these things are pointing to a more difficult environment ahead. We've seen larger rises in energy prices and signs that central banks are starting to turn off the money taps. And this has caused world markets to be hit over the last quarter. On top of this, in EM in particular, there's been a regulatory crackdown in China, and that's wiped off $1 trillion off the Chinese market. And with names like Alibaba having a 30% drawdown in the last quarter. I'm sure most of you will have heard about the Evergrande property company, which is on the brink of default and is looking at a bailout from the government. And all of these things have combined to really make investing incredibly difficult in the last quarter. And it's not just China. The rising dollar that we've seen has complicated life for other emerging markets, with Chile, Brazil, and Peru all having currencies depreciations in the 7 to 10% range. Whilst all this is going on, inflation has been gathering pace. Rising commodity prices, rising shipping costs, supply chain bottlenecks have all caused inflation to spike. Natural gas is up nearly 60% since July and 120% on the year. So this is a global phenomenon. Things like coffee are up 25% in the second quarter, and freight costs are up 40%. Whether this will be temporary, whether we can solve these supply chain issues, the jury is still out. We have to see how this works out. So what have we been doing in the portfolio? Well, in September, we increased our exposure to energy, as we feel that this is the true canary in the coal mine. As well as increasing our exposure to energy, we've also increased our short exposure to companies which we think will be hurt by these trends of higher energy and tighter monetary policy. Into the last quarter, we now find ourselves meaningfully positioned in oil and gas, as well as oil services company, and short companies that will be hurt by this current macroeconomic dynamics that we're seeing. If you want further information, please contact Benbridge or Hedge Invest, Investor Relations, and they will be able to fill you in further. Thank you.